Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Prashant, as always, my colleagues Sonia and Nigel joining me over the next 2.5 hours. Guys, good morning.
Morning.
Good morning.
Take a deep breath. We're starting a new week.
We are, and there's so much, right? There's so much news flow back and forth with the Adani Group stocks. I guess that's on one hand. On the other hand, earnings to react to. So a lot of data hitting you left, right, and center. But we're here to negotiate all of that.
Absolutely. You know what? Did you guys play music in the morning when you any particular kind of music? I've started playing the Rocky theme song.
How are you feeling today, Prashant? What side of the bed have you woken up from?
Prashant's feeling good.
It's you need you don't know what's coming your way, right?
Yeah.
Last week was any indication with all the three big events, right? And I think let's brace ourselves. This is perhaps a little calmer as compared to last week. Okay, let's quickly tell you what's lined up in terms of the trade setup, right? So the starting point is what is new. You had the US jobs report, which was a monster beat. The number came out, around market opening on Friday, US session, and it was a shockingly strong number. 500,000 job additions in the month of January. This was almost 3 times what was expected. You don't get beats like that very, very rarely, and we got that, right? So I think that is something which will continue to have implications going forward. I'll tell you why. Just a quick mention of the price reaction. So the US 10-year yield, which was gently drifting lower, got a bolt out of the blue. It was up 13 basis points. The Nasdaq lost 1.6%. Now, these are not massive. We've seen much larger moves. These are not massive moves. But the question this throws up is, the data and the price action throws up is, that, what we were saying over the last week, Thursday and Friday, the market is in the US pricing in no recession, no hawkishness. Now, the jobs data, does it question the second, which is no hawkishness? Will this require more hawkishness from the Fed? Last Wednesday, the Fed chair, Jerome Powell, emphasized disinflation 10 times over in his sort of Q&A with the press conference after the FOMC meeting. And he did not push back against market pricing. What the jobs data shows is that, Fed rate cuts perhaps are far away. The market is pricing 2 rate cuts in the second half of 2023 this year. The Fed chair did not push back against it, and that's why we got a powerful rally in the US. The jobs number and the magnitude of the beat is basically saying that the labor data is very, very strong. And I know, there are revisions and there is seasonality to it, etc., but all of that given, the numbers are too strong. So will the Fed officials, and you've got a long lineup of speakers over this week, Fed speakers who will come on the tape and speak, will they push back against market pricing? Will they have to reconsider, and will markets take note? I think that's the big global cue which we need to pay attention to. The big data driver is the consumer price inflation number, which is on the 14th of February. So we don't know what that is going to be like, but that's just to put it on the table. That's the big data point. All right, let's come to here in India. Broader markets and the Nifty, for the first time, kind of got out from under the entire Adani news story on Friday. We got a decent, nice rally on the Nifty. The indices did well. Broader markets, you can kind of nitpick and say did not participate, and that's absolutely fine. But the Nifty, the Bank Nifty, and the larger names did really look beyond, of course, what has been the dominant news story, which is this entire Adani story. And this is in line with the view that we've been presenting all the way over the last week, that eventually, but slowly and steadily, the broader market will move on, and the impact of any one news story fades. You don't react with the same amount of intensity every day after day after day. And I think on Friday we got some of the indication. I'm not saying the story itself is, is something which will not develop, but I think the impact on the broader market perhaps reduces. Just a few levels on the Nifty. On the way up, I think what bulls would want is a solid close above the 20-day moving average. That number stands at 17,897. So we'll see. It's not very far away. On the downside, I think it's the budget day low, which was 17,353, which I think if it's held, I think it's good news. On the Bank Nifty, on the way up, a close above the 20-day moving average of 41,822 is high. And on the way down, I mean, the budget on the day of the Bank Nifty on the day of the budget did not make a new low. So the previous low on the Bank Nifty, which we've detailed many times over, becomes the recent low, becomes something as a reference point, which should not be broken on the way down. So that's a quick kind of run through on the trade setup. The SGX, I think, is indicating an absolutely flattish, slightly lower kind of start. Guys, hi.
Hi, morning. I think there are two markets now, right? One, the Adani Group stocks and the kind of pressure that it has created. But on the other hand, the overall market is staging a bit of a comeback.
Yeah.
So you've got to keep those two things separate. Of course, the overhang will remain of the Adani Group stocks. But then again, the market may also move on. And in that context, there are a lot of positive domestic cues lined up this morning. Across the results season, numbers have looked good in the last 48 hours, whether it's SBI, ITC, Tata Power, a lot of the smaller companies as well. In fact, SBI has seen its best asset quality in the last 2.5 years, highest ever quarterly profit. So big thumbs up over there. For ITC as well, in any case, after the overhang of the budget was out of the way, ITC was up and about. And then on top of that, strong earnings, cigarette volume growth of 15 to 16%. I haven't seen this kind in a very long time. And also a lot of brokerage upgrades as well. So these are two pillars of the market that will hold forth and make sure the market stays afloat. Tata Power reported very good profitability in their Indonesian coal business, led by higher coal prices. So keep an eye out on that. If you look at the FI selling as well, yes, there was a sell figure, but it's much lower than what we saw in the preceding day. So we saw about 930 crores of selling compared to over 3,000 crores in the preceding day. So in that context, FI selling has also reduced, which is a good thing. Now, on the Adani Group stocks, of course, there could be more pressure there perhaps on individual names. But Uday Kotak had put out, this tweet, and I'm sure all of us have gone through it. But it just goes to show that there is perhaps no systemic risk to the Indian financial system, just quoting him verbatim. However, large Indian corporates relying on, global sources for debt and equity finance creates some kind of challenges and vulnerability. So on one hand, Adani Group stocks, some of the banks that have an exposure to it could maybe be a bit tentative. But on the other hand, flip side, there are positive cues that could offset that as well. In that context, since earnings are very strong, I'm watching out for a lot of the numbers this week. There's Tata Steel that comes out with numbers today. Tomorrow, there's Ambuja Cement, closely watched, of course, post the Adani fiasco. There's Bharti Airtel, Hero Moto. On Wednesday, a lot of smaller companies, Oberoi, Motherson, Shree Cement. On Friday of M&M. So once again, an earnings heavy week. But give and take everything, the domestic cues are not too bad. So, I'm looking for perhaps that budget day low to be held and some sort of revival, at least in individual pockets which have news.
Well, that's right. Sonia, on Friday's trading session, what was encouraging was the Indian markets, they decoupled themselves a little bit from this Adani fiasco that's playing out. And you had domestic-facing themes that did well. Whether it was the auto space, whether it was the Nifty Bank, both of them did well. In fact, they put on good weight in Friday's trading session, and it was a good close. The question is, since ITC's numbers are good, and since the Nifty Bank, with a lot of clarification that's come out there, maybe it was overdone on the downside, can the ITC and the Nifty Bank, both of them outperform and take the markets higher? Now, that's going to be very, very important. Remember, the Nifty and the Nifty Bank, they're at very, very key resistance levels, which we'll get to in just a bit. On the institutional side, as Sonia said, the FIs, well, they sold a little less, and the institutions, that's the DI and the FI, you put it together, well, they turn net buyers. So good news out there. On the futures and options space, there was clearly some short covering that did play out because the Nifty had a good rally, the Nifty Bank had a good rally, and open interest out there was down between 6 to around 8%, which perfectly ties in with what the FIs did in the FNO market. They covered close to around 26,000 short contracts, though the short positioning continues to remain elevated at around 81%. So some signs of some short covering taking place. In case things go wrong, they have put some cushion out there, so they bought some puts. But for me, the heartening aspect is the put writing is what we have seen after a very, very long time. And they wrote puts very, very aggressively. 10 puts is what they wrote for just one call. So that's the most encouraging data point for me in terms of, the index options data. What were they writing? 17,500 put, 17,600 put, and 17,700 put. Between them, there was 1 crore shares that were added out there. So aggressive writing is what we've seen. And the Nifty Bank as well, more than 10 lakh shares were added at around the 41,000 put. So that's giving you a sense that maybe the bulls, they believe that that base for the market has moved a little bit higher, at least in the near term. What are the levels you're looking at? The 20 as well as the 100 DMA and both the Nifty and the Nifty Bank, though they are going to be the resistance levels. I'll tell you what, the base for the market from around that 17,350, going by the options data, the sense you get is maybe that's moved a little bit higher to around 17,550 just in the near term. SGX Nifty suggesting a flattish opening. I think if you see a deep downtick intraday, then maybe in fact a 100-point downtick or so, maybe then in fact risk reward could favor a buy with the stop loss at around 17,650. Let's see how this one goes.
All right, Nigel, so interesting data as always. Before we start, let's tell you what's lined up here in the first half hour of the show today. We get you updates from markets across the globe. Dean Kim of William O'Neill and Company and Arvind Sanger of Geosphere Capital Management will join us to discuss the global setup. Later, our research team will bring you with CNBC TV 18's list of top 10 stocks for the day. And at around 8:30 this morning, we'll do a fundamental stock check with Prakash Diwan. So that's the lineup here over the next 30.
Okay, well, we have lots to reckon with in terms of individual views as well. First up, as we kickstart the week, we have Chetan Seth of Nomura, who maintains that fundamental investors should use these stock market pullbacks as an opportunity to raise exposure to Asian stocks, where in addition to the broader themes of better global backdrop, an end of the Fed's tightening cycle, China reopening and a recovery theme, and a bottoming of the tech cycle in first half of FY23 are additional positive factors to look out for.
Well, let's get you some money market views as well. On the rupee, B. Prasanna of ICICI Bank says exceptionally strong job data in the US has dented hopes of moderation in inflation and an early end to the Fed hiking cycle, leading to higher US yields and a stronger dollar. He adds the Indian rupee, which was already under pressure from equity outflows, would suffer from the resurgence of the dollar's strength and trade with the depreciation bias. However, the RBI is expected to smoothen the volatility from a sharp move. For this week, Prasanna expects the rupee to trade in the range of between 82 to 83 to the dollar.
Okay, and on the bonds, V. Prasanna of ICICI Bank says global yields have inched higher on much stronger labour data in the US. Back home in India, bonds rallied sharply owing to a positive surprise on next year's borrowing numbers. Prasanna expects the yield to remain supported going into the MPC this week, where 25 basis points hike is expected and a pause thereafter. He expects the 10-year benchmark to trade in a range of 7.15 to 7.40% with a softening bias.
Well, we have a lot of stock-specific action for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at SBI, ITC, Marico, Tata Power, Mahindra & Mahindra Finance, Interglobe Aviation, Paytm, as well as Dalmia Bharat. Well, they are stocks that are likely to react to positive news flow. While on the flip side, you have Manappuram and JK Cement. Well, they are stocks that could be on our radar on the back of some negative news flow.
Okay, well, let's get you some perspective. Our first